Hello everyone, welcome back to Study Space. In today's video, we are going to learn basic accounting terms. Accounting may look difficult at first, but once you understand these basic terms, everything becomes very easy. So let's get started. In this video, we will cover first the meaning of the basic accounting terms with simple examples and definitions. And finally, we will have a quick recap. This will help you understand the concepts clearly and also prepare well for exams. So, first, we'll know what all the basic accounting terms we are going to discuss in this video. First, assets, liabilities, capital, drawings, expenses, income, revenue, profit, and loss. These are the most important basic accounting terms that every student must know. We will understand each term one by one in a very simple language with examples. So let's start with assets. Assets are the resources owned by a business that are expected to give future benefits. For example, cash, land, furniture, machinery, computers, and buildings. In simple terms, assets are what a business owns. Anything that belongs to the business and has value is called an asset. Next is liabilities. Liabilities are the obligations of a business to pay money to others in the future. For example, bank loan, creditors, unpaid rent, and unpaid electricity bills. If the business has to pay it later, it is a liability. Liabilities are what a business owes to others. Liabilities are business debts. Now, let us understand what is capital. Capital is the amount invested by the owner into the business. For example, if the owner starts a business by investing 1 lakh rupees, that amount is called capital. Capital shows how much the owner has invested. In simple words, capital is the money invested by the owner in the business. Next is drawings. Drawings refers to the cash or goods withdrawn by the owner from the business for personal use. For example, if the owner takes 5,000 rupees from business cash for household expenses, it is called drawings. Drawings reduce capital. In simple words, drawings are the goods or money taken by the owner for personal use. Now let us talk about expenses. Expenses are the cost incurred by a business in order to earn revenue, such as rents, salaries, wages, electricity bills, and internet charges. Expenses are necessary to run the business. Expenses are the cost paid to run the business and earn incomes. Now, let's talk about income. Income is the money earned by the business during an accounting period. For example, sales income, service income, and commission received. Income increases the financial position of the business. Income is the money earned by the business during an accounting period. Next is revenue. Revenue is the money earned from the normal and regular activities of a business. Let's understand with an example. If a shop sells goods, worth 20,000. This 20,000 is revenue. Revenue is a main income of the business. Everyone get confused between revenue and income. Here is a clear difference. Revenue is a main income, and income, it includes revenue plus other earnings. Next is profits. Profit is the excess of income over expenses during an accounting period. For example, we have income which is 50,000 rupees and expense which is 30,000 rupees. If we deduct expense from income, then we'll get to know that we have a profit of 20,000 rupees. So, profit occurs when income is more than expense during an accounting period. Now, let's see what is loss. Loss is the excess of expenses over incomes during an accounting period. If we see that now we have an expense of 40,000 rupees and income which is 25,000 rupees. And if we deduct income minus expenses, we get a minus balance. So here we get 15,000 loss. So loss occurs when expense are more than incomes during an accounting period. Now let's do a quick recap. Now let's do a quick recap. What do we call what a business owns? Its assets. What do we call the money invested by the owner in the business? Its capital. What do we call the cost incurred to run the business? Its expense. What do we call it when income is more than the expense? Profit. What do we call the main income from regular business activities? Revenue. What do we call it when expense are more than income? Loss. What do we call what a business owes to others? Liabilities. What do we call the amount withdrawn by the owner for personal use? Drawings. That's all for today's video. If you found this lesson helpful, don't forget to like, share, and subscribe to Study Space. Keep learning, and stay curious. Thank you.